You are listening to chartingwealth.com for Thursday, the 14th of July, 2016. Let's go ahead and talk about what's going on in the markets. We always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. What does it do? Well, it tracks the entire stock market, tells us what everything is doing overall in the aggregate. And we have two up candles after the crossing over on the 11th. And again, these are 2-day candles. Now, for those of you who are new to us, everything that we're talking about, you can understand if you will simply spend 15 minutes listening to our How to Read a Stock Chart video. How do you get that? Well, go sign up for the newsletter at the website. You'll receive our email every day that includes this video along with the weekly review and forecast. Every day the market's open, we track it. We want you to understand the candlesticks that we talk about, the MACD, the signal line, the derivative oscillator. We obey Occam's razor, which is to keep things as simple as possible. But as Einstein said, they can't be simpler. But we keep it as simple as we possibly can so that it works. You can learn to read a stock chart. You can learn to figure out what's going on in the stock market. The market continues to move up, down a little bit for the day, but it will not always go up. It will be going down, according to our good friends over at the Stock Traders Almanac, if the presidential cycle holds up after this election. And it'll probably go down hard for a year, two, maybe longer. You need to figure out how to read these charts. You need to start practicing today so that you know when to exit the market, how to make money when the stock market goes down in an inverse ETF, any number of things. But you've got to start practicing and learning right now. That's what we're here to teach you. What do we see going on in the overall market? It was down 0.02% for the day, so that's just barely down. We see two big, strong up candles for the last 4 days. These are 2-day candles. The 13th candle just closed out. That is the 13th of July candle just closed out at the end of the market on Wednesday. And we had a crossover on our big indicator, the MACD, back on the 11th. 2 days later, we saw the derivative oscillator crossover going up. Two strong candles. Actually, once the Brexit, that drop was taken care of by the market's consistently moved up since then to highest highs. So we'll continue to watch and see what's going on. If we look intraday, that is on our 4-hour chart, we see that the market pretty much topped off in the morning on the 12th. It really has pretty much topped out then, and it's been going sideways for the last 2 days. Now, that again is on our short chart. We see a backup here. We don't have a crossover yet going down. Derivative oscillators losing its energy. Doesn't mean that it's going to crossover going down yet, but we do have a bit of a backup. If we see a green candle in the morning, might mean that you have an opportunity to get in for some more up movement. That may be tracked out. We'll just have to watch and see. Market's probably taking some profits right now, so we'll just see how the market does as we get into the morning on Thursday. So be aware. Now, let's look at the 2-day chart for the S&P 500. It was down a mere 0.01%, 1/100th of a percent it was down, okay? You don't really see that reflected except in a little wick on top of the last 2-day candle. Crossed over again like the total market did back on the 11th, going up on the MACD, crossing over the red signal line. That's the moving average convergence divergence indicator. It's the main indicator we use. And we saw the derivative oscillator, which is a green box or a red box. It's an oscillator, so it oscillates back and forth depending on price movement. And what we saw happen there is it crossed over on the candle ending the 13th. Now, if we look, so we're confirmed up moves on the big chart. We look at the small chart. We see also it's been sliding sideways on the 4-hour chart for about the last 2 days. Is it going to cross over going down with a true backup? And what we always want the market to do, move in one direction or the other. On the big chart, when it crosses over, we have a confirmed move. Then we wait for the smaller chart, the 4-hour chart, to move in the opposite direction. That is called a backup. Once that backup occurs, if indeed the small chart moves back in the direction of the large chart, boom, that's when we get in. It's the safest time to get in and to ride the trend that's previously been established on the big chart. That's what we're waiting for right now. We have a backup underway with the candles. We don't have a confirmed backup on the MACD. We feel safest when it backs up and actually crosses over the blue signal line, crosses over the red going down in this case, and then moves back going up. That may or may not occur. It not always happens, but when it does, we like that. That's when we look to get in. So we're watching for that, all right? Now let's go back to our 2-day chart and take a look at what's happening with the Qs. What is the Qs? Well, the S&P 500 is the SPY, and the Qs, QQQ, is the NASDAQ 100. It was down 0.23%, so it was down a great deal more. Not a lot in percentage-wise, but it was several times more than either the S&P 500 or the total market was. Again, down 0.23%, not even 1/4%. We have lots of green up candles. Again, it crossed over on the 11th going up, and about the same time the derivative oscillator crossed over a much stronger up pattern. And again, we have two big green up candles, and we drew a 2-day trend line. If we look at what happened throughout the course of the day, we can of course see that again, like the other two charts we've looked at, the total market, the S&P 500, the NASDAQ 100 has been sliding sideways, heading down over the last 2 days. Not yet a confirmed crossover, but again, if the NASDAQ starts to pop up tomorrow afternoon, those of you who just want to use candlesticks to find an entry point, you may have one for an up move. You may. We'll just wait and see. Remember, our rule is we don't try to figure out what the market's doing based upon hunches. We let the stock charts tell us. All right, that is where we are on those 3 indexes. Lastly, we're going to go to gold. As the markets were down today, gold was up handsomely, a lot more than the markets were down, almost 1%, 0.91%. Gold was up. Now, when we look at our 2-day chart, it doesn't look like gold's up for the day because we have a red down candle. However, the wick at the bottom, it would be a solid red down candle, but for the up movement, we have a long wick, well, not a long wick, but a wick about as long as the candle is down at the bottom of the candle, meaning that that loss was paired by up movement throughout the course of the day on the second day of this 2-day candle on the 13th. We have the derivative oscillator and it positive but losing some energy, and we have the MACD moving toward the signal line but still far from it. We don't have a 2-day trend line anymore. That was broken back on the candle ending on the 11th of July. So let's look at what happened intraday. Still a confirmed up move, but weakening. And we see what occurred intraday is the market basically slid sideways on gold. Lots of down movement on the 12th, and then market just digesting that down movement, moving sideways throughout the course of the day. Up some, but not a strong up after all the down movement we saw. And again, we're using Hikinashi, which means average pace in Japanese. The type of candlesticks we use. A great teaching at the website. Encourage you to go there, listen to that. That is where the markets ended up on the day. We will continue to watch for changes in things. We are having gold start after this down movement to potentially move back up. If indeed it crosses going back up, you might find an entry. We've already had the rollback as far as the candlesticks go, but again, no solid up movement yet, so play that by ear. Again, we encourage you to experiment. Remember, everything here is about education. We're not a stock calling service. We're an education firm. Everybody, we want you to go out to any of the online brokerage sites, set yourself up, the one you feel most comfortable with, set yourself up a virtual trading account there, make yourself a virtual millionaire, and then as you start recognizing patterns, figuring this out, start going into your virtual account and buying either gold or the S&P 500 by SPY or IYY or the Qs, or you can buy an inverse fund, say SH, which moves in the opposite of the S&P 500, or PSQ, which moves the opposite of the Qs. Now again, SH is a fund that moves 1-to-1. things like leveraged inverse funds, such as QID, move at twice the rate of the Qs of the NASDAQ 100. If it goes down, it goes up at twice the rate. If it goes up, it goes down at twice the rate. Things to experiment with, figure out. Get ready for the storm that is probably coming in our nation's future and the whole world in the not too distant future. If you don't have a copy of the Stock Trader's Almanac, I encourage you to buy that. You can get it anywhere. Easiest place to get it, of course, is at Amazon. Stock Trader's Almanac for 2016. You've already missed half of it, but it comes out every year. Lots of great material. Helps you figure out what the market's doing. Gives you historic information about what it's done in the past on every single day that it's open. It is a great book full of tons of information. You will learn so much from it. It's about the only book that I really talk about on this program. We're working on our book. We're going to start reading the chapters into some podcasts for you, separate podcasts, of course. So hope you get a kick out of that. Don't forget, our daily market worksheet is now available. For those of you who subscribe to the podcast at chartingwealth.com, you will see the link to it in the notes that come with your show, the emails you get every day. So please check that out. You can also find it at our YouTube channel under the information listed there. And I believe we also post it, we do, on the Facebook and the Twitter pages. So you can find Charting Wealth at all those places, Facebook, Twitter, Instagram, YouTube. We are there for you. And don't forget, if you really appreciate what we do, go to iTunes, subscribe to the podcast, and give us a 5-star rating. Say something nice about us. We appreciate all that. Also, lastly, YouTube. Do not forget, at YouTube, we are now well over 700 subscribers. When we get to 1,000, we can start providing you with proprietary broadcasts. We are very happy about being able to do that. You guys have sent us up. So many hundreds of people have subscribed in the last couple of weeks. Please keep doing that. When we get to 1,000, we're going to start providing you with proprietary broadcasts. So go subscribe to our channel at YouTube as well as iTunes, but YouTube in particular is helpful. Thanks for all you do. Let us know what else we can do for you. Be sure to check out all the new trainings online at Charting Wealth. Tell us what else you need. We will try to provide it. Thank you so much. God bless you in your trading, in your learning how to invest, you're learning how to protect yourself, you're learning how to read these stock charts. It's the most important thing you can do for your financial future is know how to read these charts. It's going to give you an incredible ability to protect yourself, your family, to potentially give you wealth in the future, help you preserve what you have. It's going to be amazing. Thank you so much. Let us hear from you. God bless from chartingwealth.com.